Thank you very much, and thank you for inviting me again. There's a special occasion also because the Governing Council today is, as we speak, discussing their next monetary policy decision. Anything I say, of course, is completely unrelated to that, to my personal views when I talk about Greece today. I think indeed there has been a lot of praise of Greece's economic performance during this conference, and I fully agree with that. I think there's been a lot of good news. My key message today is that Greece has made great progress, but there's also more to do to bring Greece back on a sustainable path of real convergence vis-a-vis the rest of the euro area. And with real convergence, I mean convergence in GDP per capita. So I think additional economic, structural policy measures are needed to kind of further strengthen the fundamentals of the Greek economy and to address remaining vulnerabilities. And by the way, that's not so different for other euro area countries as well, right? So let me very briefly touch on economic performance, and I'll say a few words on the banking system, and then I'll conclude. So Greek economy has performed very well. This has been said already several times. In per capita terms, real GDP is now something like 10% above the average, above the level it had just before the pandemic. And that's a lot more than in the rest of the euro area. So exports have recovered, labor markets have been strong, fiscal performance has improved. And when you look at the bond spreads, the relatively moderate bond spreads of Greek bonds, you can see that the credibility of economic policy has improved. So those are really great achievements. But important challenges remain. So one vulnerability is the level of public debt. I know there are mitigating factors, but it is a vulnerability. Current account deficit is another vulnerability. And I think that Greece's economic growth potential can be enhanced by reducing structural rigidities in product markets, by reducing obstacles to labor participation, and by further improving the attractiveness of Greece as a place to invest. Now, the banking system plays a crucial role in unleashing that potential. Banking systems are essential for saving, for channeling savings to investment, and that can support the increase in sustainable increase in economic growth, jobs, an increase in living standards. Now, the Greek banking system is clearly on a much stronger footing than it used to be. We have seen a remarkable decline in NPLs. Capital buffers have been strengthened. The sector is profitable again after many difficult years. So banks have now entered a new phase with higher interest rates, higher inflation. And it's natural that higher interest rates are slowing down credit growth. That's natural in this phase of the cycle. At the same time, you can see that Greek banks are benefiting from the co-financing of loans at relatively low interest rates that are made available by the EU's Recovery and Resilience Fund. And that's very good, that's very helpful. But I think in addition to that, it's also important that there are credit flows to profitable investment over and above the RRF that drive that sustainable increase in growth. And I think three priorities there, three things are needed in the banking system. First, NPLs have come down a lot, but there's still more work to do. They're still substantially above the NPL ratios of other euro area countries. That's the first thing. Second is need to further strengthen capital buffers. Capital buffers are really important for, to absorb losses and to creating the capacity to lend. Third, we have to ensure that bank profitability is based on sustainable sources by expanding the loan portfolio of banks over the business cycle. And to further streamline bank business models, digitalization, etc. So to conclude, I think the key word is sustainability. As in the rest of the euro area, Greece needs to overcome structural hurdles to economic growth. And to achieve that, economic policy has to focus also on the medium term. It should remain committed to implementing reforms and that support the growth potential. An efficient implementation of the RRF is clearly a key component in that. We're strong supporters of the RRF, and we always say our policy line is always implement it strongly, efficiently in the way it's been designed. But I think the RRF is not the only game in town. The RRF is not the solution for every economic problem. So more structural reforms above the RRF are needed. And more steps are also needed to increase those macro-financial vulnerabilities that I mentioned, including the ones in the banking system. So I hope that next year at this conference we'll be able to discuss even more achievements and to conclude that Greece is firmly back on that path of real convergence vis-à-vis the rest of the euro area. Thank you.